Folks, welcome to Best Stock Charts, the midweek follow-up. We're going to go over the symbols that we went over this past weekend on Best Stock Charts. It's posted on YouTube or on the website. If you watch this on StockTwits or Twitter, it's there as well. You can find the link under my profile. All of the symbols that I review, as always, will be listed down below in the video description section on YouTube, and on the website it'll be posted with the video as well, so you could skip around and view the symbols that you are more interested in. Okay, we're going to do a two-part show tonight. What we're going to do is we're going to do member stock chart request. This is where I review the symbols that my gold members submit for me to review on video. It's part of their service. All right, so the first chart up is for, I don't know why his name is coming up as default user, but it's for default user, maybe that's his member's username, TZA. We booked profits on TZA last week in anticipation of a rally in the markets. We got that rally, but so far this week, TZA is showing that it has more room to go to the upside. Now, we haven't taken out the highs of last week yet, but we're not that far off. This is a weekly chart, and you can see that on this weekly chart we broke out on the relative strength indicator, RSI. I expect that we will pull back and retest the support level, which was resistance in dotted blue line. We have a breakout on stochastics after putting in a double bottom setup, and both Stokes are rising. So the stochastics are strong, the RSI is strong. So from a technical perspective, the indicators are setting up nicely. Now, that being said, when I go jumping in with both feet tomorrow morning, absolutely not. Remember, we have seasonality, and seasonality at current favors longs. TZA puts you short of the Russell 2000. Don't fight seasonality this time of year. It's very, very predictable. After tomorrow's Federal Reserve meeting and the ECB meeting on Thursday, it's all over for the year. It's going to be all computerized trading. That's it. All the banksters are going to go flying off to Aspen for the holiday season on their private jets. So don't get lured into their bull and bear traps that they have set for you with their algorithms. Don't let it happen to you. Don't fight the market. It is seasonally strong this time of year. Now, that could change if we get some shock out of the ECB or the Federal Reserve, but I'm going to go with the trend of years past, and that trend is to the upside for this time of year. When would I buy TZA? I would buy it. I think we're probably going to pull back and retest this breakout point. We have broken out this week above this secondary downtrend line. It's like an early warning signal within a downtrend channel as we appear poised to rally up to the upper band. So I wouldn't buy it just now. We're midway between the downtrend channel range. I would either wait for that pullback and a retest of the breakout point, or buy on strength, buy on the breakout, especially if we clear 1465. Until then, we wait. The next chart up is NCMX. This is for fellow member Maynard, and this is a daily chart. Let's go to the weekly chart. We'll come back to the daily chart. Now, I always like to start, I'm pretty boring. I always like to start my analysis off at the very least with a weekly chart. I'll go to monthly charts, quarterly charts, but at current, the chart of NCMX is breaking down. Now, it's Wednesday. We have 2 more trading days left to go. We can rally back, but at current, we are trading down below this lower band of the rising uptrend channel. The trend is not broken yet. This is not a short, but right now it is not a buy. Now, when we take a look at the daily chart, you can see that RSI, the relative strength indicator, is putting in lower highs and poised for lower, in fact, not poised, we already have a lower low. So RSI is breaking down. That's not a good sign. You have a breakdown below trend on the stochastic. And I would become very concerned on a break below this lower band of support. Now, this support level here could act as a double bottom setup platform, meaning we set up a W formation. We already have the left side. We formed the pivot point. Now we want to come back down, retest this support level last seen on December the 6th. Hopefully, if you're long, we retest it, we hold, and we break out and move higher. Now, the daily chart shows, in terms of price action, that we are in a triangle formation. We have a bearish key reversal on the day. Not good. If you're contemplating buying these shares, I would only buy the shares if we pull back and hold this lower band of support and rally off of it. 2, if we break out above this upper band of resistance. Now, if you go with option 1, you buy the pullback, you need to use a stop loss right below that low. Why? Don't forget the weekly chart. We're breaking down. Now, what I would prefer to do here is to buy strength. This is a stock that's had a heck of a run here, a beautiful year. I mean, my God, a beautiful 6 months. And I still see the shares possibly moving higher, but I wouldn't buy them until we got a breakout in the close above this upper band of resistance. So this stock, Maynard, is still looking good. The trend is still up. We are showing signs of weakness on a weekly basis, but we do have some caution flags on the track. We'll want to respect them. And if you have any other questions, Maynard, shoot me an email or leave a comment anywhere, and I will certainly get back to you, and we'll follow up with this in the future. Just post your symbol on the members ticker cloud, and I'll go over it perhaps this weekend or next week. The next chart up is AT&T. This is for a fellow member, John. Now, the monthly chart, I'm using a monthly chart here, not even a weekly. Why? It's because it's been a rough year for the telecom sector, not just AT&T. We are in a downtrend channel, one might argue, a bull flag formation, and it looks really good. I mean, the trend on a monthly basis is still higher. We have a 2-year consolidation. Now, I will point out this, that we have, it's hard to see here, but we have a breakout so far for the month of December above this upper band of resistance. So we have an indicator that is leading price performance, assuming that we close out the month at this price or higher. Now, if we sell off by the end of December, well, then this is going to be negated. It will no longer be a breakout on RSI, the relative strength indicator. Now, Stokes are still a mess. I do not like to see the stochastics trading down below 50. In technical analysis, that is a very concerning sign when you see the stochastics trading down below the neutral level, or 50. So that tells me that we have a little bit more backing and filling to go here in terms of price before we see a breakout. But I could certainly see a breakout in mid to late 2018. And what I mean by breakout, I mean a breakout above this upper band of resistance, a retest, and then we're poised for a move higher. Now, the next chart up is gold. I'm going to start off here. I'm going to go over a few charts, and this is for fellow member Evan. Evan is one of our Bitcoin traders, and he's made a heck of a killing in the past several months. I haven't traded Bitcoin, but he is doing quite well. He shares his trades with me. So congratulations, Evan, on your Bitcoin trades. All right, so gold. He's interested in gold. Probably one of the only Bitcoin traders still interested in gold. Let's go to a daily chart. We'll begin there. All right, so the daily chart is abysmal. Now, before I get into this chart, let me say this. In 2016, I was long of the gold stocks, and silver made a killing, did very well. In 2017, we have been long of the gold mining names. We have stopped out, and we have now begun to re-enter. So 2017, while it's been a good year for us as a whole in terms of our portfolio, we have done a little bit of battle with the gold and gold mining names. But I'm going to make a bold prediction here today that we are, within the next week, we will have seen the lows for gold for at least the next 8 months. And that's a fairly bold prediction looking at this chart. Now, why do I say that? Well, you've seen relative weakness versus the S&P for gold, which is traditional for the month of December, not so traditional for the entire fall and early winter, but very traditional for, at least back until 2013, for gold and the gold mining stocks. However, January is extremely seasonally favorable for the gold stocks, and yes, for the past couple of years for gold. Last January, outstanding. The prior January, which was the first in 2016, the first January after the first rate hike in 9 years, we had an up month for gold. So all the banksters and gangsters out there in brokerage land and in bank land and on the financial news media, they want you to sell your gold, buy Bitcoin. And all the while they know exactly what happens and exactly what's on the horizon. They know that seasonality favors the gold and gold mining names at the end of December and in January. They want you to fear right now, sell your shares, sell your gold ETFs, and to get out of the way so they can buy on the cheap. You'll see volatility on Wednesday. You will see volatility on Thursday. Why? Wednesday is the Federal Reserve meeting. Thursday, the ECB meeting. Now, a rate hike is widely expected from the Federal Reserve. I wouldn't be the least bit surprised if they do not raise rates, but I'll go with the consensus. I believe that this will probably be their last rate hike in quite some time. Why? It's because there is inflation in the system. They just don't measure it like they did back when Jimmy Carter was president. We also have a tax plan that is expected to raise the deficit by easily $1 trillion over the next 10 years. Plus, we're running $1 trillion a year deficit already with historically low interest rates, and you've had a Federal Reserve that's been racing to raise rates so that they are ready to cut rates for the recession that they see coming. And you look no further than the yield curve. That's for a different story. The yield curve is flashing a recession in the coming months, and the Federal Reserve will be back cutting rates yet again. But CNBC, they want you to buy stocks at their highs. They want you to buy Bitcoin, which is the most absurd bubble, no offense, Evan, the most absurd bubble I have ever seen. So I've kind of digressed here. I want to get back to the technicals with regard to gold. Why am I putting out a bull call on gold? It's because we can go over the daily chart all day long. It doesn't matter. The weekly chart, it doesn't matter. The monthly chart, more so. I'm going to go over a quarterly chart. And we're going to come back to this chart, and I'm going to talk about what I see here that is extremely bullish. Stick with me. Let's go to the monthly chart first, then a quarterly chart. This is what I call multi-period charting. It's what I teach my members. Here's a monthly chart of gold. Did you know that we broke out of a triangle formation back in August? And ever since then, we've been retesting the breakout point. And yes, for the month of December, we have broken back down to within this trading range. And technically speaking, it is a nightmare that this event has unfolded, because this is a bull trap or a breakout point failure. Very, very bearish. My members are well aware that when you see a breakout fail, normally we will retest the lower band of the prior trading range, and there's a very good chance that we break it. There's one problem here for gold bears who are looking at the same chart I am and who have come to the same conclusion. The thing that they're missing is actually two. One, the month's not over. This could be a retest of the lower band of support. All we need to do is close above this upper band of resistance. The month is drawing to a close, and each day that goes by, obviously that window of opportunity grows smaller. But there's another breakout that nobody's talking about, and I always find it interesting. Quarterly chart. We broke out on gold back in January of 2016, 1 year ago. Remember what I said earlier that January is seasonally a strong month for the past couple of years for gold and the gold stocks. So we rallied in January, February, and then we dropped back down into this wedge formation here. Now, you could look at this in a couple of ways. One, you could say, Bob, this could be a double top here, and this may be a short. Yes, absolutely. If we close out the quarter down below this lower band of support, I'll buy that. I will agree that we may just have a double top, but it's not a short until we break down below 1,045. And believe me, if we close down below this lower band of support, it won't take too long to get down there. Now, if we rally, as I believe that we will, and we clear this upper band of resistance, you're going to see shorts flee. If we clear 1377.50 and close there on a quarterly basis, we're going to take out all-time highs in a heartbeat. Now, as I promised, I'm going to go back to the daily chart and tell you what I'm seeing setting up here. But let me first begin with the obvious. The obvious is that this is a horrible chart. That cannot be argued. So let's get the obvious out of the way and now start talking about the constructive. The constructive is this, is that stochastics are setting up for a double bottom setup. And I know most of you who don't watch my videos or are not members, you probably say, what the heck does that mean? What that means is that what we look for, one of the technical indicators that we use primarily is the stochastic. And the stochastic, more often than not, will double bottom out, much as it did here, double bottom, here, double bottom. In this case, it was an undercut double bottom. Many times they are. Here, a double bottom, so on and so forth. It's not 100% guaranteed, but it's more often the rule and usually the exception that you don't get one. So we are in that second leg of the double bottom. So very close to the end of at least this leg of the downtrend. It doesn't mean that we can't rally and then roll right back over again. Now, in terms of price action, you have seen 3 consecutive days of, let's call it indecision. And the bears have won the day each day, admittedly. But we are flashing spinning top formations, meaning we rally higher, then sell off, only to rally back, but still close lower, but net, well off the lows of the day. So what this tells me is that you have buyers coming in and buying weakness. Volume. The sell volume over the past couple of weeks has been fairly benign, especially this week. So the daily chart here is implying at the minimum that we are very close to a bottom. We may pull back and retest this support level here, last seen back in July at 1234, but I think it'll hold. Now, what will cause the gold stocks to rally? The ECB. Forget the Federal Reserve. Why do I say that? Well, you'll still have an open market committee, but in February, Janet Yellen's gone. And you have an equally as dovish Fed chairman stepping into the role. Now, the ECB, while we've been raising rates for the past several years, they have continued down the path of quantitative easing. Their growth rate is better than ours, but their inflation rate is also higher than ours. During their last meeting in October, Mario Draghi extended QE out another 8 months or so. But if he gives an indication that they're going to start rolling off their assets off their balance sheet, much like the Federal Reserve is doing, it will negate the rate hike here in the States. You'll see weakness in the US dollar, strength in the euro, and that will send gold ripping higher. So again, I think that within the next 7 trading days, we will have seen a bottom in gold and the gold mining names, and I'm predicting a higher January. Evan, I hope this helps. Let me know if you have any questions, please. All right, let's get to best stock charts from the weekend. Okay, first chart up, XLV weekly chart. We had a retest of the breakout point last week. This week an inside week, no new high, no new low. Very close to a buy signal here, but not quite yet. We're looking for a breakout above last week's highs, a retest of the breakout point on a daily chart, and then we'll look to start buying up the XLV. Not yet, though. EIDO, the Indonesian iShares, weekly chart. We're retesting the breakout point. We're very close to scratching the itch and beginning to buy some shares here. If what I predict is true and the Fed meeting this month is a bag of nothing and the dollar drops and yields fall, well, then you're going to see emerging markets rip along with gold and other precious metals, commodities. So I'm going to wait until the Fed and ECB meetings are concluded. Then we'll consider building the position in EIDO. Not yet, though. Facebook. I'm growing more bearish on Facebook by the day. A couple of weeks ago, I was bearish on it. The chart improved after we got this bullish key reversal last week. This week, we are down. We still haven't taken out the support level here in dotted blue, but we are breaking down on Stokes. If this were Friday, I would be very concerned, but it could rally back by Friday afternoon. We're breaking down an ultimate oscillator. When you take a look at a daily chart, it even gets uglier. We have lower highs on RSI, the relative strength indicator. You have a lower high on stochastic, a double top. If we break down below 169.01, we'll be eyeballing Facebook as a short into the new year. It's not a short yet. I would not go shorting Facebook. While we have signs of trouble here, they are not confirmed and in the books quite yet. If you go shorting Facebook tomorrow, you are shorting at your own peril. Volume today was slightly above average. Up volume yesterday was just simply anemic, horrible. Lower highs and ultimate oscillator, sloppy price action here on Stoch RSI, not looking good. So I wouldn't be a buyer. I wouldn't go shorting either. It's simply a watch at this point in time. Google, it attempted to break out. In fact, we had a new weekly high, but it has rolled over, and we are now once again retesting the breakout point. Now, to me, that's bullish. I'm okay with that as long as we trade above and close above this upper band of resistance Friday afternoon, 4 p.m. Eastern Standard Time. If we don't, and we close back down into this trading range, we're coming back down to the lower band of support, just as we did last week. Daily chart, possible double top, very similar to Facebook. Not as ugly as Facebook, but it's pretty close. So certainly not a short, but not quite a long. Members will be watching this. Look at this series of lower highs here on Stokes. The stochastics are not looking good. MACD is not looking good. The MACD indicator, volume was well above average today to the downside and very light yesterday to the upside. Warning flag is on the track here. LABU. Now, I spoke bullishly about LABU over the weekend, and I didn't buy any this week, but I am not ready to rule it out quite yet. Now, I'm going to go to the daily chart, and the daily chart is even more ugly than the weekly chart, to be honest with you. But the week isn't over. LABU is very volatile, so you need to give it room to run, but you need to respect it as well when you're looking to build a position. Again, we haven't purchased shares of LABU based upon last week's breakout on a weekly chart. I mentioned over the weekend, be very careful with these Stokes. They're trading down below 50. If there's one thing that concerned me, go back to that video. I mentioned this. If there's one thing that concerned me with the Stokes trading down below 50, that is not a good sign. You do not want your stochastic and RSI trading down below 50. But guess what, folks? Much as I've been saying this entire video, the week isn't over yet. All right, so we could still rally back and close strong. In fact, what we're doing is we're retesting a prior resistance level. One could argue that this is a buy point here. Now, the only thing holding me back from buying into my own line is the daily chart. And if you go buying I would not go buying a big position based upon this retest. And in fact, if we close down below this lower band of support in dotted blue, I would stop out of the trade. And if you haven't executed it, I would not execute it. Don't think you're getting in on the cheap here if we close down below this lower band of support. The chart is simply telling you that you're possibly seeing a continuation breakdown set up here. But I'm not ruling out a possible recovery here by the end of the week. Now, the daily chart is, no doubt about it, pretty goddamn ugly. We have had an attempted breakout, fail, right here. We broke down below the lower band of support, rallied back to break out yet again. So we broke out on the 8th. What did we do today? Breakout point failure. The breakout failed. This is why I like to use weekly charts in conjunction with daily charts to avoid this bloodshed. Volume has been above average, but is declining. Members, we're going to talk more about LABU probably tomorrow. We'll talk strategy there. ConocoPhillips COP. We don't have a breakout yet on a weekly chart, but the daily chart is setting up strong again, members. We're going to talk about ConocoPhillips as a potential buy fairly soon. I'll give you my rationale behind that buy signal. Stokes are rising on a weekly basis. The chart is looking good. Not quite a buy yet, members. More to come. Endologics, ELGX. No breakout yet on a weekly chart. We have an up week. I laid out in the week ahead commentary our strategy for beginning to build a position in ELGX, and I also discussed the catalyst I believe that will propel the shares higher. It is posted in the members area. If you're not interested in trade alerts, you just want my weekend commentary and monthly commentary, just sign up for the bronze level membership and you'll gain access to that. It's very reasonable, $27.95 per month, very reasonable for the analysis that you get every week. I do your homework for you. Oil. I was bullish on it going into the week. Why? We have a retest of the breakout point. We did put in a new weekly high. We have given up those gains. I still think that there's more upside potential here, especially since the dollar appears to be losing a little bit of steam. It reversed on the day, and that'll only help oil. Members, more to come on USO. EGY, Valco Energy, very close to a buy signal. Not quite yet, though. It's still a watch. Flat on the week. Deutsche X Trackers. I still don't know what these guys do. I haven't done my research yet on it, though. But I said that it was a bullish chart. It'll probably break out. Guess what? What are we doing? We're beginning to break out. Stokes are rising. RSI rising. All good stuff. Here's a concern, and I discussed this with members on the week ahead commentary. Again, it's posted in the members area. I said that this could be either a double bottom setup or a double top. And it appears as though this week it's looking as though it may be a double top, even though we're poised to break out. We're breaking out. So a little bit of concern here that we're not breaking out. In fact, we're down on the week on Stoke RSI. So that is a divergence. And many traders make the mistake of trading the stock market using technical analysis and indicators as purely overbought and oversold indicators. Nothing could be further than the truth. These are tools that help you identify divergences, early signals that you should begin to worry or become optimistic about a stock, an ETF in this case, before the price reflects it. Volume this week, well, this is a weekly chart. The week's not over yet. It appears to be fairly light. We're midweek and we're less than halfway through last week's high. So that's a concern. So I like DBEF. I'm not ready to buy it here. I need to see a clear breakout above resistance. ABB, I'm liking this setup here. And you may be saying, Bob, we're down on the week. You were bullish on it going into the week, but now we're down on the week, and you're even more optimistic than you were over the weekend. Yes, I am. Why? Daily chart. We broke out last week. We're pulling back. We're retesting the breakout point. We are holding it. Not once, but twice now. And we reversed off of it today. So members, we'll be talking more about ABB in the coming day or so. We want to get these Fed meetings behind us about getting long of ABB. VDSI, I was bullish on it over the weekend. Why? We had a breakout on RSI. We have a double bottom setup, and we have a continuation breakout this week along with Stokes. Beautiful stuff. Now, you day traders out there really aren't going to appreciate the value that weekly breakouts bring for long-term investing. If you're focused on day trading, these weekly charts can help you to spot longer-term directional plays, meaning what's the bias longer term? Is the direction to the upside, higher lows and higher highs, or are we seeing lower highs and lower lows? You'll find value that way. But as swing traders, we find a lot of value, especially investors, out of using weekly, monthly, quarterly charts to identify good risk-reward opportunities. So we have a continuation breakout this week. VDSI is looking very good. Members, we're going to be talking more about VDSI as a long. Loving the setup here. More to come. EWI, the Italian iShares. I was bullish on it last week. I remain bullish. We broke out. We're retesting the breakout point. If we hold it and then begin to break out, very strong buy signal all day long. Longer term, good as an investment, and really good as a swing trade. So if you swing traders out there don't really want or need trade alerts or daily commentary, sign up for my bronze level membership, and I give you the overview for the coming week every weekend on the weekend commentary. So you go into the week locked and loaded with information, and then I do the monthly commentary where we look at sectors that are showing higher highs and continuation breakouts and providing us with which sectors are outperforming and which sectors are lagging or which sectors are pausing. So EWI, I'm getting a little bit long-winded here. EWI looking good on a weekly chart, not quite ready to buy just yet, especially with the ECB meeting out there. And that's it for tonight, folks. If you're not currently a member, please check out our bronze level membership. Gold and silver memberships are currently closed. We are at capacity with members. And if you become a bronze member before the end of the year, what I'll do is, because I plan on expanding capacity for silver and gold members in 2018, I'll give you a 30-day free trial to silver or gold, your call. Just sign up for the bronze level membership, and we'll get you set up after the first of the year with the 30-day free trial for silver and bronze level memberships. And that's it for tonight, folks. If you're not currently subscribed, please click the bell seen here so that you get notified of my videos in the future. Subscribe to the channel on YouTube if you're watching it there. Leave a comment below. Give me a like if you would. If you watch this on StockTwits, Twitter, Facebook, give me a like. Follow me there. Leave a comment, and I'll definitely get back to you. I do watch the comments, and I will get back to you. And we have a Facebook discussion group. Please join there. There's a link to it in the video description. There's a link to it in the video description area on YouTube, and as well next to the video on the website. Everybody have a profitable trading week. Happy holidays to those who are checking out for the remainder of the year. Be well.